Which early-stage growth companies could be big investment winners? Today, we'll speak with an investor about 5 under-the-radar SPACs covering everything from quantum computing to AI, and we'll help you better understand how to think about investing in this area. So let's get started. This is Ticker Take.
All right, John, today we're opening up the treasure chest.
Yeah, that's how people feel about SPACs. Remember SPACs? They got really hot a few years ago.
Yeah, some exciting stocks came to market through SPACs like DraftKings and Oklo, but sometimes they don't work out.
True, which is why sometimes you open the treasure chest and there's no treasure in it. How do you know how to navigate that as an investor?
Right. So today we're talking to Julian Klymochko of Accelerate about 5 exciting new SPACs tied to areas like quantum computing and AI. But first, we got him to explain how they work.
Julian, thanks for joining us here on Ticker Take.
Yeah, thanks for having me, John.
All right. As an investor, you're always scouring the markets, watching for different trends. Mm-hmm. One of those trends you've been watching, SPACs, which everybody was watching a few years ago. But apparently they're back. What have you been watching recently?
Yeah, it's this asset class that has gone through a bit of a boom and a bust period and now is coming back because there's a lot of emerging opportunities within the SPAC segment of the market, these high growth opportunities that is really starting to resonate with investors at this point in time.
Right. And, it's interesting because there's so many companies in tech today that only go public after they're a lot more mature. Yep. So that's the treasure chest aspect of SPACs. But I guess the flip side is you open up the treasure chest and there's nothing in it. So I guess in some cases there can be hard lessons in SPACs, risks as well. So as an investor, what's your rule book? What's your playbook? How do you find a winner?
That's a great question. And I think one of the primary ways is just a diversified approach. So old school rule of investing is diversification, taking a basket approach, not to having too many eggs in one basket, because these being emerging plays, high potential growth companies, but highly risky, I'd advise against just holding one or two. I think the basket approach within a diversified approach or a diversified portfolio is likely the best way to go about it, just given the inherent risks with some of these opportunities.
All right. With all that said, let's walk through all 5 of these SPACs. But first, a friendly reminder, this is not financial advice. Stock number 1. Crane Harbor acquisition.
Okay, so with this SPAC, we're talking about a entity that is tied to another business, which is quantum related, Xanadu. Is that the story here?
Yes. So Crane Harbor acquisition announced a merger with Xanadu, announced but not yet completed. So provides an ability for investors to get in before the deal closes, before ETFs start buying, before sell-side analysts start initiating coverage on it, before even the ticker changes to the new pro forma entity ticker. And Xanadu is an emerging quantum play. As you know, quantum stocks have performed very well in 24 and 25. You had IonQ, you had D-Wave Quantum, and these names are now valued at $10 to $20 billion in market cap after rallying significantly. Xanadu, in my opinion, could provide more bang for your buck because the valuation is only $3.1 billion. So it's a bit earlier stage. They say, or they claim to have achieved quantum supremacy, which means their quantum computer can perform tasks that traditional computer cannot. So really cool technology, obviously a super high growth potential investment, but albeit risky. At the end of the day, no one knows which of these quantum computing technologies are going to work, if any. However, many do believe that the future of computing is in quantum technologies. Now, with that, another thing that I like to pay attention to with a SPAC merger is if it features a PIPE. Now, what a PIPE means is private investment and public equity, which ultimately entails institutional investors getting a look inside the deal. So they get so-called wall crossed. It gives them inside information and they can invest at deal announcement. So they put up a lot of money into this deal. This transaction features a PIPE, $275 million from very well-known investors and industry companies such as AMD, BMO, CIBC. And what that provides is it underwrites the valuation of the company by institutional investors who've taken a look under the hood.
And gives a bit of a vote of confidence potentially
Exactly.
with some investors?
Yeah.
Stock number 2, Churchill Capital X.
Okay, so here's another example of a SPAC tied to a quantum-related business. The underlying business is called Infleqtion.
Correct. Yes. So this emerging growth play is Infleqtion, another early stage quantum computing technology company. And the way this innovation kind of happened over the past several decades, you had the CPU in terms of computing, then you had the GPU, and supposedly the next step in computing is the QPU, quantum processing unit. In Infleqtion is thought to be one of the leaders. Again, the valuation is much more early stage than some of the other publicly traded comparables, such as IonQ or D-Wave, which are valued above 10 billion. Infleqtion in this transaction is valued at 1.8 billion. So it does provide some of that earlier upside optionality if it were to re-rate to where some of its peers are trading. So investors just to get in at a lower price than some of its comparables. In addition, on this deal also features a PIPE transaction with institutional investors such as Maverick and Morgan Stanley. So some high profile names getting in on this deal at $10 per share for a total of 125 million. So a bit smaller pipe, but still in the 9 figures, significant, and ultimately provides credibility to the valuation of the name.
Stock number 3, Cantor Equity Partners 2.
Okay, so with this SPAC, Julian, it is tied to a company called Securitize, which is tied to the world of tokenization.
Correct. Now, what Securitize is they're a platform for the tokenization of real-world assets, which could entail stocks, it could entail funds, it could entail real estate, basically any asset, putting it on the blockchain. And what that enables is global real-time settlement as opposed to the system of, for example, stock settlement T+1, papers going back and forth, now electronic.
Saves time.
Yes, exactly. Not just that, but global distributed ledger that's transparent, provides instant settlement, and you always know what you own. So there's no sort of discrepancies or errors in terms of settling stocks. And in addition, it can provide liquidity to assets that currently aren't publicly traded. So it's thought of as this massive new potential asset class going on to the blockchain.
And does this one, you talked with other examples, you could get a bit of a look into the pipeline of whether there's some notable investors that might be signed up. Is there anything to watch for with this one too? Yeah,
so on the Securitize deal, it's a bit smaller. These are primarily small cap, micro cap companies. So this transaction values Securitize at $1.25 billion. It does come with a $225 million pipe, so sizable. Plus you're having some brand name investors who are already in the private company rolling their stakes forward. So you have ARK Invest, Kathy Wood, you have BlackRock, Morgan Stanley as well. So some high profile investors involved in this deal.
Stock number 4, Willow Lane Acquisition.
Okay, this SPAC, Julian, is tied to an underlying business called Boost Run, which I believe is tied to the AI boom.
Yes. So Boost Run is a so-called neo cloud, provider of artificial intelligence infrastructure for powering AI workflows. So for example, they would have several data centers that host tens of thousands of NVIDIA GPUs that are crunching these AI workflows constantly. And their plan is to build these out significantly as AI adoption increases. So extremely high growth rate, triple digit growth. One of their comparables would be CoreWeave, which went public, I believe about a year ago, and their stock has done very well. Boost Run is a much smaller opportunity, approximately $600 million in valuation and much newer. However, with that sort of micro cap, it's potentially much higher upside, higher potential growth rate, and, a different opportunity for investors looking to capitalize on the AI theme and do it before you have the ETF buying and the sell side coverage prior to this merger with Willow Lane completing.
And given the size, does that mean maybe we know a little bit less about the investor base, or there aren't as many as well-known, call it, investors that are already tied to the company?
Exactly. This one does not feature a PIPE investment, which makes it even more speculative. You don't have that institutional underwriting of the valuation. So investors are flying a little blind here, but that said, not a lot of pure play AI opportunities in the market, particularly in the sub-billion-dollar range. So this one, I feel, is very early stage. Investors that have the opportunity to get in early, but with that, the additional risks of an early stage growth play.
And stock number 5, Perceptive Capital Solutions.
Okay, so Julian, our final SPAC is tied to an underlying business called Freenome, innovations in medicine, and I believe in particular cancer detection.
Yes, and you have this company Freenome with this emerging technology that they can or plan to have an early cancer detection test via just taking your blood. So super convenient compared to other ways of detecting cancer. And as you know, basically everyone has someone who they've lost to cancer over time, unfortunately, and it's a devastating disease. However, the earlier you can detect it, the more likely that you can cure the disease or prevent its negative effects. So with that, really the key here is to make detection as easy as possible. So if a Freenome can really crack this technology to detect cancer via a simple blood test at its earlier stages, not only does this business have tremendous upside, it's valued at just $1.1 billion. However, with that, if they added a benefit of a real social benefit to this company succeeding.
And then what about the investor base? What do we know at this point?
Yeah, so this company is backed by some of the leading healthcare business investment firms in the industry. They backed the company for $240 million PIPE transaction. So they've underwritten the valuation here and really sort of backed up the truck on the potential behind this business. Again, early stage healthcare. A lot of these plays are kind of somewhat like a lottery ticket, right? If they work, they can work tremendously well where you make multiples of your money, and when they don't, you know, it could be like a science experiment gone bad.
All right. Well, a lot to consider there in this new emerging market for SPACs in 2026. Julian, thanks very much for shedding some light on it.
Thanks for having me.
Thanks for watching here on the BNN Bloomberg YouTube channel.
TickerTake has its own YouTube channel as well. You can find full information in the description. See you next time.